All right, it's that time again. Welcome to another edition of the End of Day Report of yours truly. That's the Algo Capitalist, aka the Vulcan, coming to you live once again from PulseWaveTrading.com. All right, so today was pretty much as I expected. Markets behaving the way they should, trading inside of their ranges, and not really doing much else. That's what you come to expect, right? Predictable patterns. We talked about that this morning. We talked about predictable patterns and how you can tell what's going on in any given day in any given market. And we demonstrated that this morning. We showed you that for the most part, the market's been moving all the same, all in the same direction, with really little to no deviations at all. It's just continuously doing what it do. And we're not really, blown away by that. We're not shocked by it. We come to expect it, man. We come to expect it. So markets are behaving and doing exactly as we expected them to do and as we wanted them to do. All right, so let's see here. I have to do something right quick. That's the sad part about, going on live when you're not ready. If you don't, it messes up everything. So you have to still go. And it sucks. What can I say? So I work with what I got, but I was right in the middle of doing something. More so, I call it a favor. I'm doing a favor for someone. There were certain things that someone asked of me if something was possible. And so I said I would look into it just to see, what was possible. And that's what we do here. We try to make dreams come true. It's not always possible that I can do certain things, but wherever possible, I do try to do it. I try to make it so that, dreams come true. And I'm right in the middle of trying to make a particular dream come true, and things aren't going the way I want. It's really difficult to get certain things to move like they should. And I'm trying to convert. I think I may have found the answer that I was looking for. Sometimes when I talk out loud and think about things, it hits me like boom, out of nowhere. So I think I got it now. I think I know what I need to do. And we're just going to make it work. So let's do this. Let's go. Try and get these charts ready for you too. So let's see. I think I know. Sometimes it's hard because if the data doesn't load or it loads a certain way, it can mess up the charts. Like that one chart I've been working on like every day, and it's still messing up. It's just not acting right. Y'all know what I'm talking about. Y'all know the one I'm talking about. It's just a pain in my neck, and I don't like having to fool with it, but it doesn't give me much choice. All right, let's see here. Okay. I think I got it now. It's these two right here. All right, so I'm gonna put it here. Let's see if I got it. This is a surprise that I think you guys are gonna like. Yep, you're gonna like it. All right, let's Let's move this over here. Okay, so looks like I got everything done the way I want it to. Now all I have to do is make sure that the chart is viewable. That way you guys can see it. And when you do request, I'll have them ready for you. So just give me one more second here. Let me see if I can pull it up. And then I think we're in business. All right, so let's see here. All right. Okay, I think I got what I needed. So we should be good now. Should is the operative word. Let's see if it worked. All right, so let me save this. All right, let's get into these charts right quick. Hopefully I didn't leave anything out. Okay, that's 1, 2. Oh boy, having everything up and running before I go live is so difficult. Just a little frustrating. All right, let's see. We'll do a couple today. Basically, the market movement that we saw today, because it was exactly the way I anticipated it going. When you look at these charts, you're not going to really see a whole lot. It's going to look like last Thursday's chart, only because we keep having these back-to-back-to-back inside days, and it's really kind of comical in a way. We could get some more movement tomorrow, but a lot of it's going to be contingent upon what Europe looks like when it reopens. All right, let's see. All right, yeah, I see you there. I finished listening to it as well, and it was pretty interesting. Again though, I've been saying stuff like this for a long time, going all the way back to the late great Charlie McGrath show. We dealt with this stuff. No one else wanted to talk about the things that we was talking about, but we talked about it, and now all it's just coming to pass now. Okay, let's see here. All right, yeah, I know. There's a lot of information going around. That's one thing about the internet. They can't ban everything. They can't, find everything, because people are constantly uploading and re-uploading. Okay, Barry, I see you here too. It's going to take a while. Hold on. All right, so good news is Chainlink is out for BTC. Okay, Chainlink BTC is out and has been out now, running for a little bit. But the USD is going to take a little bit longer because I need to finish building out the USD database. All right, and I do not have that yet. So until that is up and running, it is what it is. All right, it's going to take some time for the USD. So just gonna have to rock with me on the Bitcoin for right now. All right, that's all. That's all we got. All right, so let's get into these charts. All right, so first chart we got up here is right there. All right, if you take a look here, you see that we got a primary crash alert now for tomorrow, for tonight into tomorrow's trading in Bitcoin. Wait a minute. this one is not working right. Hold on 1 second. Give me just a minute. See, this was I was afraid of. Things not updating correctly. Hold on. Let's see if we can fix this. All right. Let's see here. All right, we'll do this. Okay, here we go. This is more like it. All right, so here's the Bitcoin now. Notice how we had that primary crash alert right here. Market continued to move lower, secondary crash alert, and then today here we are lower yet still. So we have a slow bleed to the bottom now. The question is it going to pick up momentum to the downside? And it's looking and threatening like it's going to. We're now looking at the beginning stages of a bearish weekly trend momentum. And here's that swing momentum right here that just turned negative, just turned bearish. So right now it's not looking good for Bitcoin right now. Looking like this was a hard resistance area right here. All right, that's like I told you, I said between 7,000 and 7,500 ish. It's proven to be a big task. It's proven to be too much. 7,500 ish is exactly where we went, and you see the market now retreating and pulling back. This is one of those situations where you hate to be right, but unfortunately, I was right. So the bullish argument is done at this moment. Until this market turns things around, it's now the bears back in control. All right, taking a look at the bonds, looking at ticker TLT. You see, still flat, trading within the zone. No difference. Nothing happening. It's just one of those weird things, man. Markets are just not doing too much. All right, let's see here. Let's blow this one up. Very interesting. My charts are not auto-populating like they should be. All right, I'm gonna have to go to plan B. My stuff is not updating. All right, here is the NASDAQ 100. As you can see here, how it got up underneath of there. And it too, right now, is not auto-populating. What is going on here? I'm having a dickens of a time with my charts not auto-populating. So bear with me a second. I think I know what I'm gonna have to do. I'm gonna have to back up and start again. So give me a second. Okay, I think I see what happened. So bear with me. For some odd reason, it was not connected to the server. So I'm reconnecting it to the server right now. And then we'll try that chart segment one more time. All right, we're gonna try it one more time. Oh boy, technology, I tell you. Can't live with it. Sure enough, can't live without it. All right, so while that's booting up, as you know, we are now in earnings season. So the market is going to be getting pushed around every time a report comes out, okay? So I expect to see a lot of different things come to pass. You're going to see markets going all over the place. Don't get too, worked up over it. It's just the nature of the beast. Earnings tends to move markets a lot, just like this whole CV19. That pushes things around too. Whatever report comes out that could jeopardize market outlook, it can make markets turn on a dime. So just be aware of that going into it. All right. And we're coming off of a holiday too. So you got earnings season. You got coming off the back of a holiday. So it's going to take, one more day for the markets to sort things out before we get back into the full swing of things. So that's just kind of like what I'm seeing right now. So I'm not too moved by today's market action one way or the other. All right, so let's try this again. Yeah, another thing too is, we got seasonals coming up also. So the seasonal effects will start to come into play here. All right, so we can't ignore that either. All right, here we go. Looks like things are on and popping now. All right, so the bonds TLT, 4 bars, 4 days in a row. All you're doing is moving sideways, literally. All right, and we got the beginning stages of a bearish weekly trend momentum. So momentum is definitely off. It's down. It's bearish. I would say that the market is having a hard time rallying, especially after the Fed just came in and pumped in an enormous amount of liquidity. It is pretty enormous. We'll see if this breaks the market. We need to give the market one more day because we need Europe to reopen to see what's it going to really be. All right, this right here is your Russell. All right, so as you can see, we got a primary crash alert for tomorrow. So that turnaround reversal Tuesday could be in effect. We got a bullish weekly trend momentum though. So this may not play out exactly tomorrow, but we're right here at resistance. So if we do get another up progression, I see that rally being sold. All right, so we got 3 to 5 days for this crash alert to play out unless we get another alert. And right now it's looking like that's exactly what is going to happen. So right now, as far as I'm concerned, bears are in control of that market. All right, here's the crude oil now. Been a lot of news with the crude oil, agreements to do this and do that with the supply chain and cut back millions of barrels a day and just a lot of stuff, man. So actually, no, the liquidity from the Fed is not working against the market. Remember, it takes a while for that liquidity to work its way throughout the markets. Technically speaking, according to economics, it takes at least 18 months, up to 18 months for Fed liquidity to work its way throughout the economy. Remember, I've been telling you guys that. I said we have over a decade's worth of Fed liquidity pumping into the markets. The Fed has been pumping liquidity into the stock market since 9/11, and I'm sorry, since the bubble, the NASDAQ bubble bursting. That was the first Fed liquidity pump. It was an emergency pump. Then after 9/11, they pumped even more. Again, we have been pumping now for almost 20 years of Fed liquidity. Each Fed action takes up to 18 months to trickle throughout the economy. All right. So that's almost 2 years per Fed action. So the Fed has been doing this for 20 years. So technically speaking, they've pumped in enough liquidity to keep the bull market running another 2 decades. Plus some, make it 30 more years. That's crazy, but that's where we are. So here's your crude oil. Crude oil can't do anything. It doesn't know what it wants to do. It's confused. We keep getting these back to backs. All right. Market looks like it's basing out, but it could just be a long base for another drop. There's nothing bullish on the chart right now. We got a bearish weekly trend momentum starting. So, and we got bearish momentum reading here. So technically speaking, the market could drop again at any moment. So this market it's on a standstill. It doesn't know what it wants to do. Today's trading activity has done nothing to change the outlook and aspect of any of these charts. Here's your NASDAQ 100. Do you see any difference? Nope. All we did was nothing. We're still sideways. No way around it. The momentum is, it's stuck in neutral. It's bullish, but it's stuck in neutral at this trend line resistance. It's struggling. Momentum is really struggling. Don't know if it'll break through or not. It's just really hard to say at this moment. Can it break through? I don't know. I really, really don't know. That's my point. We don't know what is going to happen here. It's really hard for the market to get a handle on things and decide where it wants to go. So until we know where it wants to go, it's looking flat, hitting resistance, looking flat, like it could fall at any moment. Here's your real estate, looking at IYR. What do we got here? We got a primary crash alert for tomorrow. So real estate is not acting as a safe haven either. It's looking like it's about to take a big drop. Look at this. That looks nasty. Super nasty. Taking a look at silver now, going at the futures, looking like it's getting ready for a big drop. We got a primary crash alert on the silver for tomorrow, for tonight into tomorrow. What are we going to do with this? Now the market didn't do anything today, but it did set itself up for a fall. So tomorrow we're looking like, tonight into tomorrow, we got a primary crash alert that we got to prepare for, which really hurts the bullish outcome. There is no bullish argument for silver right now. All you got is speculation. All right, now here is gold. Gold is looking golden. It's looking like it's really feeling itself right now, threatening to break 1800. Got good momentum, bullish weekly trend momentum. I'm ready to buy some gold here. I think we run to 2000 the way it's looking now. So gold's looking good. All right, we got the US dollar index. It's under pressure. It's sitting right here on that trend line support, threatening to crack below it. You got momentum also to the downside. All right, you got negative momentum and negative weekly trend momentum, and an arcing downward slope on that Kumo cloud as well. Looks like we've topped out finally in the US dollar, folks. Yep. And that's all I got. So tonight is going to be probably a little quiet because, they want to see what Europe's really going to do. And then tomorrow morning, we'll see what directions the markets really want to, get involved in. What do they really want to do? Are we going up? Are we going down? Are we going left? Are we going right? I think we're going to know the answer to those questions at some point in the morning. So I'm really anxious to see what's going to happen. I have no working orders at this point in time. Doesn't make any sense to do anything, being that we don't know what the markets really want to do just yet. Europe hasn't even opened. Well, Europe is open now, but Europe and Asia should be open now, but ain't nothing on and popping. U.S. stock indexes are really quiet right now. Nothing's happening. All markets are just in wait mode. Everyone's coming back to work from vacation. I should note that there is a crash alert for the Dow futures tomorrow. Primary crash alert. There's also a primary crash alert for the E-mini S&P 500 for tomorrow. There is a rally alert for the NASDAQ, go figure, a rally alert for oil, and a crash alert, primary crash alert for the Russell. So these markets are like all over the place. They don't know what they want to do. They don't know where they want to be. So this should be interesting. Rally alert for oil. Is oil going to break out of that sideways thing that it's caught in? You know? Now, silver has a primary crash alert for tomorrow, but gold has a rally alert, man. All right. The money flows are showing that that's what's going on. We got a secondary rally alert going on. The money flow alert is showing bullish for Bitcoin, futures composite index, and gold, but not silver. Silver is laying down. Silver doesn't know what it wants to be when it grows up. It's just really struggling. Let me see. The SLV is probably in the same boat. Let me look at the SLV. So, like I said, GLD and SLV most of the time can be really priced a lot better. It can tell you what's going on. Okay, now see, I have a rally alert for SLV tomorrow. So SLV may be showing us what's really going on. So I'm looking at that SLV right now. Maybe it will show us a little bit of direction, and then we can get a real good reading on the silver, and maybe even USLV. Let me see if USLV is looking like SLV. Nah, USLV is going the opposite direction. USLV has a crash alert on it, primary crash alert. So there's a dislocation happening right now in these markets. I don't like seeing dislocation. Yeah, I don't like seeing the dislocation. Not at all. Not at all. So if anything, all right, I'm looking at the primary crash alert in the USLV, but then you notice something though. This one is interesting because it's actually a stop and reverse play for tomorrow. Very interesting. We got a stop and reverse play in the USLV. And look at that intraday price inflection point. That is very interesting. I'm a little impressed with the readings from silver. The mixed signals, I'm a little impressed by that. I think something could be brewing in silver. I think the money flows there could be an algo shift happening in silver. Now that I'm thinking about it and I'm looking at it, I'm looking at the report, tonight into tomorrow's report, and it's showing that we are in a bear market correction still in the silver, according to USLV. And even though we have that crash alert and the intraday price inflection point is pointing in that direction, it's even favoring that, which it should if we got a primary crash alert. But then when you go back to SLV on tomorrow's report, it has a momentum alert saying that the money flows is on the long side of the market, and our intraday price inflection point is actually favoring the long side of the market. So yeah, that looks like an algo shift to me. Now, for those that don't know, I've always taught that I believe that the ETFs, the commodity ETFs, normally track the market better than their futures counterparts. Futures tend to overshoot their targets, but SLV and GLD are usually very smooth, just like the SPY and the QQQ and the IWM and the DIA. Those usually move a lot better. The cash markets tend to to move a lot better. Oh, CO, I'm not looking at charts. I'm not looking at charts right now, but our chart segment is over. What I'm doing is I'm looking at the report for tomorrow. I'm looking at the actual price trigger reports for tomorrow. That's what I'm basing what I'm talking to you on. I'm basing it on that. Yeah. So yeah. So what I'm looking to now, we've already looked at the charts. I'm just looking at the actual reports that went out this evening. So you can, if you want to look at what I'm saying, you want to pull up USLV and SLV because that's what we're talking about right now. I'm talking about the reports for tomorrow, SLV, USLV. You'll notice the money flow alert. You got a 911 money flow alert for SLV, but you have a primary crash alert for USLV. Now, USLV is not as smooth as SLV because it tries to do like 2 times the movement or 3 times the movement. Any ETF that's going to try to track, double and triple the movements, those are going to be priced just like the futures. They're going to be sloppy and all over the place like the futures. And, as far as, that goes. So I'm just really looking at the SLV and I'm really thinking that we may be seeing an algo shift, and it could be for multiple reasons. Another reason too could be the way the contracts are right now. With rollover right now, I think we're still playing the May contract. I think in silver futures, but you're in June on the gold futures. See what I'm saying? So I think that could have a lot to do with the mixing up and the twisting up of signals. Because right now, according to the SLV, we're pulse waving. We're pulse waving bullish, according to SLV. How do you know if we're pulse waving bullish? The way you know we're pulse waving bullish is because there is nothing in the weekly trigger column. All right. If it was populated, then you know that we are not pulse waving bullish. Likewise, if the weekly trigger is 0, that means we are pulse waving bearish. All right, falling prices. So according to the SLV, we are pulse waving bullish. All right, i.e., pulse waving positive. So, and we got positive money flow. So if anything, I would say, according to the PulseWave price trigger report, the system is letting us know that SLV has been under quiet accumulation, folks. Money has been flowing into the silver, but you don't really see it showing up on the futures. If you're just looking at futures, you're not seeing the true money flow. I'm sitting here looking at the true money flow, and according to the PulseWave price trigger report, the market there's a differential of anywhere from $1 to $1.87. So according to silver, SLV, we have a movement from bottom to top of $1.87. So SLV has moved $1.87 off of its intraday price inflection point, and that's just within the last not even 10 days. That's let's see, that's 1, 2, 3, 4, 5, 6, 8 days, 8 trading days. So within 8 trading days, SLV, which kind of moves kind of slow, but SLV has still moved, $1.87. That's a lot of movement. So I think, with that being said, I have to agree that the money favors the long side of the market right now in silver. And just that soon as me talking, silver futures is now up 21 cents. I see what I'm saying? Sometimes when you come to an impasse and you're like, what's going on? You have to switch from the futures to their to the cash counterpart. So because there's an ETF for all the commodities, basically, you have to consult that sometimes, because sometimes the futures report will get a little jacked up, especially with contracts rollover, or if there's any contango going on and stuff like that. All right, so I got a question. Does SLV historically speak to what you will see in the future? Absolutely. 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 Yes, it does. Yes, it does. All right, so oh yeah, you came late, Danny. So basically what's going on is nothing. Right now, the markets are very sideways, trying to decide what direction they want to go in. The only exception right now for tonight into tomorrow's trading, according to the price trigger reports that went out a while ago, Bitcoin is looking like it wants to bounce here. So I'm expecting a bounce in the Bitcoin according to the system report. And we were just looking at different anomalies so far and how the markets have been moving sideways but moving together and with the same velocity, which is not really a normal thing. We do have a positive money flow for tomorrow in the Bitcoin Futures Composite Index. For those who are uninitiated, money flow is what we call our secondary rally or crash alert. If you see in the report that it's populated with a 911, a 911 is a money flow alert. Really, it's a pseudo rally or crash alert. Unlike the primary alert, which is like the market's ready to go. These tend to track money flows in and out of the market. So if I got a 911 and Bitcoin futures composite index for tonight into tomorrow's trading, it's telling me that the money flows are going to the long side of the market. All right, so that's what I'm using. It's not a pure rally alert. It's a money flow alert. Money flow alerts are good because it lets you know where the bias is in the market. Crash and rally alerts is not showing you a bias in the market. It's showing you, according to the money flow, is an extreme money flow reading. And it's saying that the money flows are enough that this market is ready to crash or this market is ready to explode because the money flows have been piling in on one side of the market. What happens is when money flows pile into one side of the market, it creates an imbalance, and that's how you get your crashes and that's how you get your rallies. If enough selling comes into a market, then that's going to be enough to break its back and cause the market to tip over. If enough money flows come in on the buy side of the market, prices explode. You have no choice but to explode because now you have all these bids coming in to the market and not enough selling, so they can't keep the market at bay. The market explodes and it breaks out. So that's how it is. Yeah, any movement in the underlining will always help the ETF. So the Bitcoin ETF, the GBTC, yes, this will help that as well because it is impossible. It is impossible unless a market is absolutely broken. It is impossible for the underlying ETF not to benefit from its underlying counterpart. All right, because an ETF is a derivative of a futures contract. All right, it's a derivative. That's what it's there for. All right, so it's supposed to derive its value based on the futures contract that is designed on. So for GBTC for tomorrow, you'll be looking for a certain type of money flow to take place. All right, does that make sense? All right, so on the GBTC, yeah, the system is picking up. The intraday price inflection point favors the long side of the market tomorrow. All right, so the intraday price inflection point does favor the long side of the market. So we have to wait and see if the market is going to meet the criteria and the conditions for a long position. And according to the schematic of the system, it's looking like that condition will be met. So looks like a long position will be in order for tomorrow. We shall see. We shall see. It's not a guarantee. It's just saying that it's looking like it might be. All right. So we'll be watching that one intently on the GBTC. All right. Can we trust Dig and Doug yet? You know what, man? I ain't gonna lie. I kind of threw in the towel and said, forget y'all then, And I just been looking at playing the actual futures contract, to be quite honest with you. Just keep it at 100. But it warrants another look. Since you brought it up, let's look. Okay, so we see the market was down just slightly today. Not a lot of volume. Um, but we do have a positive money flow for Dig tomorrow. We got positive money flow. What does that mean? It means that money seems to be piling up on the long side, favoring the long side of the market for whatever reason. It's worth a try. All right. As far as Doug is concerned, money is favoring the short side of the market. So it's expecting Doug to fall, not rally. So maybe we have put in a short-term bottom in the oil. I don't know. I'm looking at some of the other ETFs here, like DTO is another option to Doug. You got DTO. DTO is saying that it's about to pull back too, and that's an inverse ETF. So, I mean, I don't know. It makes me look more closely at the long side of the market for oil. All right, if you look at USO is a little wanting in that, but I'm looking at the money flows, and the intraday price inflection point is favoring the long side of the market. So I don't know. Tough to say, because we don't always have necessarily a rally, a crash alert to go on, because if a market's not giving off any alerts, what are you gonna do? You know what I'm saying? Like, what do? It's nothing you can do. You have to look at a few things. So what I do when I get the report, first things I'm looking at off the bat is I'm looking for rally and crash alerts. I want to know what is set up right now, and if it's a particular market I like to trade, like that's my market right there. That's my joint. I look for that first. That's what I do. And if I can't, if the market I like to trade doesn't have a rally or crash alert, then the next thing I'm going to look for is, do we at least have some type of, alert that there is at least some type of bullish or bearish momentum in the system? Sometimes I can't even get that, right? So the next thing I do, if I can't at least get that, is I'll say, okay, what does the momentum trigger show me? And I'll look to see what side of the market that's favoring. And if I still can't get a good answer from that, then I don't have a choice but to chill. But the way it's looking now, man, it is what it is. Okay, Dex, who really controls all commodities? That's a loaded question. I only know one answer to that question, and I'll keep it a buck with you. Back from my Wall Street days, I was told in no uncertain terms that three entities, it was either two or three, I think it's three. I know it's at least two, but I think it's three. Three entities control the meat market. That's what I was told. It's two or three. And I actually met a guy I met one of the key players in that market, in the meat market, and he was quite well to do, and that was his thing. He operated in the meat market, and yeah, meat. Commodities is gangster, all the way around, but meat and oil is mad gangster. Yeah. So back now, again, we're talking. We're going back to the '90s now. I was told it was like 2 or 3 key entities that controlled and managed that market, manipulate that market, and they could push the prices any way they wanted to. And I have to admit, I did see evidence of that. Meat is a very thinly traded market as well. It doesn't take long. It doesn't take much to push meat. You guys probably don't remember this, but back at least, I guess it's almost a decade now. Right around the time of the Obama thing. I don't know if it was the year that he was running, or was it sometime during his first term. The years started running together. Now I can't recall. But anyway, there was a commodity cycle that kind of went into play. First, it started with cotton. All of a sudden, out of nowhere, cotton just popped off. Cotton has always historically traded between 60 to 60 cent range, right? Yeah, in the 60s. And all of a sudden, cotton ran to 300, and that was just like, is the world coming to an end? What in the world are we talking about? And that went on for a minute, and then it just all of a sudden one day it just stopped and went back to the 60s. So then after that, pork bellies popped off. Pork bellies popped off. When I say it popped off, it went lock limit up for like, the entire summer. It was so bad that the CFTC and all commodities trading merchants and all the brokers decided that they were going to pull pork bellies off of the available commodities that you could trade. They took it off. They took it off the market. So there's still a pork belly market. There's always a spot market, but you and I can't trade it. They say it's no more. It's no longer going to be available to retail clients because it went lock limit up for months. Imagine lock limit every day for months. Imagine if the Dow hit its circuit breaker limits every day for 2 months straight. It would be the end of the world, right? But that's what it did. And then after that, the next one in line was crude oil. And that went lock limit up every day for the whole summer in 2008. So, yeah, these things can happen. Historically speaking, a majority of the commodity futures are thinly traded instruments, with the exception of the grain market and the oil market and the bond market and the stock index futures markets. Those are extremely liquid. All right, extremely liquid. I cut my teeth on commodity futures. That's how I came into the game that way. My license was a Series 3 commodities trading. I was registered with the NFA and the CFTC. Yep, that's where the big boys go. That's where the big money goes. A lot of money going in them commodities, man. Because at the end of the day, you can't eat a stock, but you can definitely eat 5,000 bushels of soybeans delivered at your doorstep. You feel me? So, yeah, man. Anyway, I've gone on long enough. Tomorrow is probably going to be a set on your hands day. I got to see where these markets are going to go. Right now, I'm not getting any kind of rhythm for the most part. I expect to see a lot more than what I was getting, and I'm not feeling the love right now. It's like The markets are so confused because of all the news. The markets are like, what do we do, Dex? We don't know what direction we want to move in, Dex. We want to pop off, Dex, but right now we can't pop off. There's nothing to pop off with or to. And right now, some of these things, their charts are jacked up. The trading ranges are ginormous for some of this stuff. I would never risk that kind of coin on a trade. Some of this stuff is too rich for my blood. I ain't gonna front. Some of this stuff is 1,000 points. I'm not gonna trade something with 1,000 point daily swing. Are you kidding? You gotta be out of your mind. Now I'll trade the ETF counterparts, like I'll trade the SPY, the QQQ. I'll do that, but I can't bang the stock index futures right now. Not until they settle down. Not until we come to some type of understanding. Then I can get in there and bang it out again when those markets kind of return back to normalcy. But right now they're just not. The only one that's normal, that's returned to some type of normalcy, is crude oil. I can literally go in there right now and place a ticket for tonight and sleep good tonight and be comfortable knowing that I'm not going to blow up in the morning. I won't wake up and be like, oh my God, what happened? You know, the risk to reward ratios in the oil right now are actually back into normal alignment. So if anything, I might place a trade there. Looking at the stock indexes, I'm really like, I'm upset because I can't trade it right now. I'm not going to risk 1,000 points. I'm sorry. That is fiduciary irresponsible. Fiducially irresponsible. Can't do it. Sorry. Russell though, the Russell is looking okay though. The Russell might work. I'm looking at the Russell. The only thing right now, from the commodity future standpoint, that is playable is the Russell and the crude oil right now, and that's it. I can't find another. And gold. I'm sorry. So gold, crude, and Russell. That's the three right there. So if anything, I'm looking at those for tomorrow. I'm seriously considering an operation in one of those, or maybe all three. I just don't know. I have to think about it. I'm not in any hurry. I'm not in a rush. This is a short trading week, so I'm not really expecting much out of the markets as a whole. I'm just going to be really watching diligently just to see what pops off, and what's going to happen, what's going to make me some money. But that's all I really care about right now. I care about what's going to pay me. Where's my next, pay coming from? Is it coming from oil? Is it coming from gold? Is it coming from somewhere? Somewhere, somebody, somewhere, somebody help me. That's all I'm looking for. Where my play at? I can't do gold right now. I just looked at it. I can't do gold. I'm sad. I can't do gold. I can't. I'm sorry. I can't do the gold. Let me look at silver. I might be able to do the silver, but no, I'm gonna chill because I still don't like that. No, I'm gonna chill on that. I'm just gonna do oil. I'm gonna type in the oil here, and I'll type in the Russell. That's about it. I thought I was gonna be able to do something, but I'm not. I can't do it. And you should be disciplined like that too, folks. You really should be disciplined like that too. All right. I don't care if it's your favorite market. If the risk to reward ratios get too high, in other words, when you start seeing them stops looking ridiculous, you don't have no business in that market. All right. You don't have no business in that market. You can't be in that market. You got to wait until it calms down so you can get back in there, because any market that has mad volatility and crazy swings, price swings, and wide ranges, what are you doing with your life? Well, I'm just only going to risk this much. No, you can't. You can't do that. You can't force your checkbook on the market. The market doesn't care the size of your account or your risk tolerance. It could care less about you as a person. It only cares about hurting people. The markets exist to hurt as many people as possible. All right. It wants to hurt people's feelings and break people's hearts. All right. You can't be fiduciarily reckless. You can't. All right. You got to do it right. You gotta do it right. All right. All right. Nah, man, I haven't seen that yet. But now you just told me I'm gonna write that on my to-do list. I'm gonna do it right now. Hold on. Do it right now. What you done made me do? Okay. All right. I put it on my to-do list, man. So hopefully if I get some time tomorrow, I can peep it. I'll peep it. But right now, you figure I just got out of the lab today, man. For real. Just working on some stuff. Yeah, I only see oil play and I see the Russell, but I'm looking at my stuff here. All right, so looking at the alerts column because we always gotta check our stuff with the alert. So we got a money flow. I've got a positive money flow on the oil that can justify that trade. But I got a crash alert on the Russell. So I got to be prepared on that one. That one, technically speaking, is a stop and reverse trade. So I got to make a note of that. Stop and reverse. So I have to be prepared to do that. And I don't know if I'm prepared to do that tonight. So I might just pass on all of it and just wait and see what happens tomorrow. We're coming off a holiday. The whole world wasn't even trading today. Let's see what they do tonight into tomorrow. I'll probably get a better understanding, a better reading in the morning. So that's all I got, man. I'm out. Love you guys, man. Be encouraged. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.